Hello everyone, my name is Sriram Iyer. I'm a research analyst at the Commodity Resource Desk at Reliance Securities. Welcome everyone to this week's Gold and Silver Weekly Podcast. International and domestic gold prices are on the way for the first weekly loss this week. It was a lackluster week of trade for both gold and silver this week. Prices had initially moved higher as growing inflationary pressures pulled the US Treasury benchmark yields lower and supported markets. But after the initial rise, prices fell from the highs of the week as risk appetite resumed, with equities and bond yields rebounding to curb the safe haven appeal of the gold and silver markets. The US dollar also found support this week as rising COVID infections, especially the Delta variant, pushed the investors toward the safe haven appeal of the greenback and also kept the upside limited in gold and silver prices. On the central bank front, the ECB, European Central Bank, pledged to keep its interest rates at record lows for even longer. And dovish comments by the ECB President Christine Lagarde also suggested that low rates are here to stay for a long term. This indeed capped the downside in the markets, but overall, what happened was the euro fell after the statement and in turn helped the dollar, and which weighed on the gold and silver markets this week. Meanwhile, silver rebounded from the lows of this week after supported by reflation trade, with higher economic growth and rising inflation was positive for silver, which have also industrial applications. So silver found support on the back of that, but overall weakness of the gold markets and stronger dollar kept the upside limited in the silver markets as well. Looking ahead, we feel that silver and gold prices could remain in a narrow trading band next week. Improved risk appetite will cap upside while the movements of the dollar will also move the markets next week. However, investors will await cues from the US Federal Reserve monetary policy meeting next week. The Fed monetary policy meeting next week will be again followed by the comments by the chairman Jerome Powell, which could continue to suggest that the central bank would remain dovish or accommodative despite recent spike in inflation. So this could keep the downside limited in gold and silver markets, but other data like durable goods and GDP data for the second quarter from the US will also move the market. So it will be a very range-bound markets next week. On the charts, we feel that for the international spot gold range will be anywhere between 1790 on the lower side to 1830 on the higher side, and markets could remain within this week. And only a fresh breakout on either side will provide us fresh ranges for the international gold markets. On the domestic side, we feel that 47,000 on the lower side and 48,000 on the higher side will be the range for this coming week. And again, like the international markets, breakout from these ranges will provide us fresh triggers or fresh ranges, I should say. So in the short run, we believe that markets could remain range bound and traders could remain away, not take unnecessary risks. But in the longer run, investors and traders should wait for the right price and to enter in the market. But as we still believe that accommodative stance, at least in this year and in the coming next 6 to 8 months in 2022, will keep markets supported, and most of the central banks will remain accommodative. So this will continue to keep the markets higher in the medium term to longer term horizon. So that's it from our side. Thank you for listening. Have a pleasant day and a week ahead. Thank you.